Today is Monday, December 7th, and this is a post-market review for the stock market activities today. Today was another muted, low-volume, boring day. However, there are important developments if you were paying attention. Number one, the dollar tried to rally, and even though it failed to create a noticeable rally today, we saw prospective sectors that would be affected by a rally in the US dollar react. For example, we saw copper down, a lot of the metal names were down, oil down, energy down, but we also saw gold continuing the march higher and the rebound from the bottom, yields trending a little lower. So how do you read the tape? We will discuss that during the charts analysis. I will piece the entire puzzle for you. Also keep in mind that the VIX was trading higher today. What's up with that? We'll talk about it. We'll piece everything together during the charts analysis. And stick around for the conclusion of the video because I will answer some of the viewers' questions regarding Moderna, Freeport-McMoRan, how to pick options, strike prices, and many more. With that being said, here we go. The Dow Industrial Average closing in the red, down 148.47 points or 0.49%. The Nasdaq closing in the green, 55.71 points or a gain of 0.45%. The S&P 500 in the red by 7.16 points or a decline of 0.19%. We saw another last minute of the day rescue operation. We saw the indices declining lower, a lot lower. And then boom, comes the green candle, popping the indices higher by the end of the day. What about the sector's performance? Right away, you see that number one is technology for the gold medal, and silver second place goes to communication services, aka Facebook. The third place and the bronze medal goes to consumer cyclicals. The laggards of the day led by energy, real estate, and financials. Energy down big today. Moving on to the futures market performance. And right away, we saw crude oil down about 1% or so. We saw a decline in the British pound regarding the whole Brexit fiasco. And you saw the dollar, the US dollar that is, gaining just a little bit of momentum today. What's going on with softs? We see gains for lumber, coffee, cotton. However, coca and OJ declining for the day. Metals, gold up, silver up. However, copper, palladium, and the winner for weeks, platinum down about 2% or so. Only silver and gold closing in the green. What's going on with meats? They're getting slaughtered once again, and I do have news for you about what's going on regarding China. I have a lot of articles to share with you about the futures market. I will do that tomorrow because we don't have time today. But it is bad news for meats, and you see feeder cattle down almost 1.5%, and lean hogs down almost 2.5% for the day. What's going on with grains? Oats, my favorite, up over 3.5%. And again, we will talk about all these developments in the futures market because they will affect your understanding of certain stocks. If you don't trade futures, that is okay. But for example, the surge in oats will affect certain stocks that you might want to consider to add to your portfolio. Continuing, we see corn, rough rice, and wheat closing in the green. Meanwhile, canola, soybean meal, and soybean oil declining for the day. Moving on to the big casino, the options market. What do we have here? The most active names for the day. Number one, Tesla. We see a surge here, a spike higher, just a little bit, but enough to take Tesla to number one. About 1.3 million contracts exchanged hands today. 64% of those were calls. Apple at number two with 1.2 million contracts. And check this one out. Over 75% of those were calls. They're going all in buying Apple right now, and the technicals support that thesis. Palantir, number three. We see a spike up in activities here. We thought that Palantir will be abandoned since the Fastly table started to get hotter on Friday. What happened to Fastly? They don't like it anymore. The Fastly table was empty today. Back to the Palantir table. About 950,000 contracts for Palantir, 73% of those were calls. And the reason the stock spiked double digits today is the news that Palantir is securing about 44 million bucks contract with the FDA. So it is a 44 million bucks contract over the years. And the maniacs at the casino decided to reward the stock by adding about 8 billion bucks to its valuation. I guess if Palantir secures 1 billion bucks contract, that will take it all the way to a trillion bucks valuation. But we do see that American Airlines is starting to heat up here with over 700,000 contracts. 67% of those are calls. NEO, remember when NEO was hot? Not anymore. They don't like it anymore. Tesla stealing the thunder from NEO. But it is notable at the casino. 640,000 contracts, about 66% of those were calls. Moving on to some interesting activities in the options market today. And right away, looking at the activities today, I feel like Buzz Lightyear. There is no sign of intelligence here because they're gambling all in. There is no thesis here. Sometimes you see intelligent trades. Today, there are only a few of those. The majority is just gambling, rolling the dice, see where it lands. And here it is, Space, Virgin Galactic. They're buying the 39 calls, expiration date next week, December 18th, with expectation that the name will climb over 15% to the upside. And they're betting big bucks for this one, about 2 million bucks. And here it is, Kodak. Back in action. Is there any sign of intelligence here? No, there is not. They're just gambling. It is the new sports betting. And here, they're betting on the Kodak horse to go to the finish line by buying the 15 bucks calls, expiration date December 18th, with expectation that the name will climb over 25% by then. Very expensive trade costing about 2 million bucks. Here is another one for KSS calls, and they're buying calls on calls. 42.5, expiration date January 15th, and these are very expensive, costing about 3 million bucks for this trade alone. Easy come, easy go. But here is a notable trade for the Qs, and it is a spread, a put spread, bearish spread, same trader, buying the 285 puts, expiration date January 22nd, with expectation that the Qs will decline over 7% by then. And they're paying about 420 bucks for this one. And then they're selling the 270 puts, same expiration date, January 22nd, and they're collecting about 2 bucks and 30 cents for this one. All in all, they're reducing their entry price to only 2 bucks or so. This is a very intelligent construction here from this particular trader, giving himself or herself enough time for the trade to work out by going to January 22nd. And yes, they are limiting their profits prospects to only 15 bucks, but when the entry price is only 2 bucks, you can make close to 500% profit if the trade goes your way. That is more than enough. Very intelligent trade right here. Only one of few today. Here is another one for the SPY. This time around, they're bullish. They're buying calls. The 388 expiration date, January 22nd, with expectation that the SPY will gain an additional 5% or so. And also, this is a very expensive trade costing about 1 million bucks. What about the XBI, the biotech ETF? A lot of people want to bet against Moderna, and I will address that in a question during the conclusion of this video. I say if you want to bet against Moderna, bet against the XBI instead, because Moderna's options are very, very expensive right now. And here is one for the XBI. They're buying the 120 puts, expiration date New Year's Eve. The expectation that the biotech ETF will decline about 13% or so by then. Here is a notable one for AMD, and we continue to see these bullish bets on AMD. They did some last week, some worked, some didn't, expired worthless. They're giving it another shot this week by buying the 102 calls, expiration date next week, December 18th, with expectation that the name will climb over 8.5% by then. But perhaps the most shocking one is for Amazon. It is a bullish bet costing a ton of money. To be exact, over 20 million bucks. Somebody paid over 20 million bucks today alone to buy these calls. And by the way, just to address the question, how do you know that it is a buy or a sell? How do you know that it's somebody buying the calls or selling them? It is a trade. for every buy, there is a sell, but the sell is not triggered until there is a buy. So the buy triggers the sell. The banks have no problem. You want calls on Amazon, calls on Boeing, you want to go crazy out of the money, they'll give you that. They'll sell you the calls. They have them ready. They got a lot of shares to sell upside calls for. But here it is for Amazon. They're buying the 3,495 calls. Expiration date January 15th with expectation that the name will climb over 10.5% by then. Very expensive, very notable. Amazon been pretty much doing nothing for weeks and weeks. Is the sleeping giant about to be awakened to the upside? This is exactly what this trader is betting on. Moving on to the headlines that shaped the day. And right away, we heard from Apple developing their own chips for the high-end Mac laptops. What did that do to Intel? Crashing the stock of Intel. We will take a look at the impact of this news on other chip manufacturers in the heat map analysis. What about stimulus optimism? What's going on there? Any updates? We did not hear about calls between Mnuchin and Pelosi this time around, but we heard from the government, Congress, and they agreed to fund the government for about an additional 1 week to give themselves the time to agree on a stimulus deal, meaning that we now have a time limit, a time horizon of about a week for the stimulus to be passed or not. We do know that this stimulus is not going to be the big one. The BlackRock administration is saying, yes, we're going to agree to this one, about 900 billion or so, but don't be upset, there is more. Once we get hold of the government, we will pass another stimulus. Be careful of the sneaky manipulation here, because Trump offered Mnuchin, offered Nancy 1.9 trillion bucks stimulus, which includes the $1,200 checks to Americans. Nancy said no. A lot of the Dem supporters said, we're not going to blame Nancy, because even if Nancy agreed to it, Mitch McConnell would shoot it down. I disagree. I think Mitch would have done whatever Trump wanted him to do. So Nancy passed on that deal. She played her card wrong because she bet that there will be a blue wave and the Democrats are going to control Congress and the Senate very easily, and then they can pass a larger stimulus. Now that the cards are not in Nancy's favor, what are they doing? They're going to agree on a deal, a Republican deal, that does not include the $1,200 stimulus. That is what the market cares about. The market cares about the $1,200 stimulus because we've seen the impact before. If you give us free money, we're going out there on a spending spree. We're going to splurge, buying iPhones, stuff that we don't need for Amazon, and that will stimulate the economy, will increase inflation, and stocks will surge even higher. Without the $1,200, this will be a disappointment to the market. And I know they're going to play the game. Oh wait, there is more. In February, when we take hold of the government, that is all bullshit because it depends on the outcome of the Senate races in Georgia. If the Democrats don't win both seats, then that is all there is. We're just going to get the $900 billion and that's it. No more. Let's see how the market is going to like that outcome. Moving on. Are you guys ready to stampede to buy the Airbnb IPO? And before you ask the question, should I buy the Airbnb IPO or not? Don't even ask me that question. You know the answer. Yes, you should. They're gonna stampede on this one like there is no tomorrow. And now you see Airbnb lifting the IPO price from the previous range of 44 to 50 bucks to the new range of 56 to 60 bucks. And I expect by the time of the IPO, this range will climb even higher to 70, maybe 80 bucks per share, meaning that the Airbnb insiders will become insanely rich instantly. We saw the same stupidity and the mania with Snowflake. And by the way, if you bought Snowflake, if you buy it at this level, I guarantee you will be a bag holder for years to come. The company makes $400 million in revenue. It is valued over $100 billion in market cap, meaning that you are paying 250 times what the company produces in a year. And I know, but there is growth. Let's say that they make 10 times the revenue next year. They make $4 billion. You're still paying over 25 times sales. Ask yourself, are you that stupid that you pay 250 times worth of what the company produces in a year? The answer is yes, we are that stupid in 2020. We are willing to buy any lottery ticket because this is the current market mentality. Can you fight it? No, you can't. But you can make money out of it the same way we made money from Snowflake. You buy it, you dump it, and that's that. We're going to do the same thing with Airbnb. And I issued this poll on my Twitter page asking which IPO are you most excited to invest in? Is it Airbnb, DoorDash, or OnlyFans? So far, the majority of you are excited to invest in Airbnb, OnlyFans at number 2, and no love for DoorDash. And by the way, you might think that I'm joking about OnlyFans, but it is $1 billion media company, according to Bloomberg. Why not? If OnlyFans decide to go into the public market via an IPO, I will buy with both hands. I think the company is worth about $1 trillion. Since it's pretty much the 21st century's brothel, which is a very lucrative business, historically speaking. And frankly, I'm not really sure about this new generation, the Gen Z generation. I cannot understand them at all. What is the point of paying some chick online $20 a month so she can send you pictures of her feet? But I guess the new generation, the Gen Z generation, likes to receive their pleasures digitally. Why not? Remember that the federal Jerome says that we print the money digitally.
Fair to say you simply flooded the system with money?
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally.
Everything is now done digitally. You buy your stuff digitally, you splurge online digitally, you contact your parents digitally, you go to work digitally, and now it seems that the new generation prefers to receive their orgasms digitally as well. Moving on to the PPP fraud operation, aka the largest transfer of wealth from the poor to the rich, the biggest scam in the history of mankind. And the more we learn about the data released from the Treasury and the Small Business Administration, the more horrific the picture gets. I know we don't have journalists anymore in this country, but perhaps some kids on TikTok gonna do the job and investigate what actually happened in the PPP loans program. And once all the facts are released, you will be stunned. The billions and billions of dollars went missing. They went from the Treasury to the banks, to some accounts here and there, and then they disappeared. Poof. But certain things don't disappear. And we've seen the millionaires, car dealerships, and country clubs, and hedge funds abusing the PPP loan program. And here we have news about America's sweetheart Tom Brady. And here it is. Last week, the Small Business Administration released data on the Paycheck Protection Program, the PPP loans, given out by the government as a part of the $2 trillion COVID-19 relief package in March. Brady's company, TB12 Inc., received a loan of about $1 million. I know maybe Tom Brady's hitting hard times, former athletes don't keep their money, maybe the guy needs a break here, he's suffering, we need to give him some money, the poor guy. Here it is. Brady has made more than $200 million in career earnings and is estimated to be worth $180 million per Fox Business. His wife, Gisele Bündchen, who works as a supermodel, has a net worth of approximately $400 million. But you know, it is tough to sell stocks and move your wealth around and pay taxes, so why not rob the taxpayer the easy way? And this guy Tom Brady is a piece of shit. He's a complete fraud. He has to cheat about anything. He deflates the ball to win, and now he's cheating the PPP loans program. Next thing you know, he's gonna cheat the Social Security program, claiming that he's 65 in football years. I tell you what, I've never been a fan of the Pats. I'm more of a Yankees kind of guy. Oh, wait a minute, that is a different sport. Moving on to the heat map analysis. What do we see here? You see that the hot trades since post-election, the rotation trade, the weak dollar trade is taking a break today. What is working? The momentum names, the tech names, and let's start with the technology sector. Microsoft muted. It's been muted for a while, not moving at all. Meaning the Microsoft options for you gamblers, I know you love to gamble, so do I. Microsoft is extremely cheap in terms of options right now. Is it gonna pop higher, lower? Who knows? But they are very, very cheap. So you might want to do a strategy called the straddle. What does that mean? You buy a call and a put for the same strike price and the same expiration date. And who cares? The stock goes higher, goes lower. You win either way if Microsoft's volatility starts to heat up. Because right now the stock is very dormant. The options are really cheap. Any impulsive movement to the upside or the downside will make this strategy very profitable. The key is to give yourself enough time for the trade to work. What about Apple? Apple gaining another 1% or so. But again, the hottest sector in technology is chips. And we see Intel declining about 3.5% for the day, but the hot trade of Taiwan. We cover the options market every day and you see bullish bets on Taiwan almost every day. The stock climbing another 2.5% or so. Nvidia muted, Qualcomm muted, Micron declining by about 1% or so. We have few winners here in the software names, ServiceNow, Workday, about 2% or so to the upside. But the notable winner of the day is Shopify, climbing about 3% to the upside. Notice that Uber is down about 2% or so, and I think Uber is reaching at least a short-term top because, as I said in my Twitter page today, certain stocks will be sold to raise the cash for the Airbnb, DoorDash IPOs. So the thinking is, we made enough profits with Uber, let's dump Uber and move that cash to DoorDash instead. So I expect Uber to decline from this point on. What about communication services? Facebook is the biggest winner here, 2% or so in the green. And we have Netflix with about 3.5% climbing higher. Spotify, Snapchat, still hot. Spotify, extremely hot, about 7% to the upside for the day. Video games names, Activision, Electronic Arts, Take-Two, all climbing about 1% or so apiece. Moving on to consumer cyclicals. Amazon muted, the sleeping giant still muted. If that trader in the options market is right, Amazon would pop higher significantly. We'll see if that happens or not. Alibaba, another day of pain, down about 1% or so. What about automotives? NIO rebounding for the day, closing up about 5% or so. Tesla, the squeeze continues, gaining another 7% or so. But the loser of the day, Honda Motors and Ford Motors down a little over 1% apiece. General Motors muted for the day. What's going on with restaurants? All of the reopening trade, the IWM trades are not doing so well today. We see McDonald's down, but it is a similar story with the Cheesecake Factory, Darden, Chili's, all closing in the red. And it is a similar story with apparel. Ross Stores, TJ Maxx, Lululemon closing in the red, even though that Lulu is not really a reopening trade. It's been hot all along. Marriott, hotels down, casinos down, cruises down, with exception to Norwegian cruises, just slightly in the green. And what is working here in consumer cyclicals? We have Lowe's rebounding and residentials from the painful declines last week. Lennar up, D.R. Horton up, Toll Brothers up. However, Toll Brothers reported earnings after the bell, and the name is trading lower, and it will likely take all of the home builders down with it. Moving on to consumer defensives, what do we see here? A rebounding Kroger, up about 1% or so, but we see weakness here in the two hottest names from last week. Cisco down about 3% and Tyson down 2% or so. Walmart, Target, we see declines for days now, and we have a put options trade for Target. If you're following this one, it is working very well. Coca-Cola down a little over 1.5%. And what is working here? Tobacco. Philip Morris continues to be a very hot name here, and British American Tobacco gaining over 3% for the day. What about REITs? Bad day for REITs. American Tower, the pain continues, down about 2%. What about Simon Property, the hottest name for last week, down about 5% for the day. Moving on to utilities, and they're rebounding just a tiny bit because yields declined for the day. And I see any rebound in utilities as an opportunity to short because yields are going to climb higher. That 1% target is going to act like a magnet sooner or later, unless we have a fallout in the stimulus deal. Moving on to materials. What's going on today? Gold miners. Remember all the pain for gold miners the last few weeks? Today, they're having a good day. New Mound, up over 3%. Barrick Gold, almost 2%. Franco-Nevada, 3% to the upside. What is not working for the day? Copper, Freeport-McMoRan, down almost 2%. We see chemicals not working. However, one of the hottest names, Valley, another green day. The difference between Freeport McMoran and Valley is that Valley is supported by the options gambling. They're buying a lot of call options, causing and gamma squeeze regardless if there are good news or bad news for the company itself. Freeport McMoran not catching as much action in the options market. Moving on to oil. Energy. Chevron down almost 3%. Exxon down almost 2%. British Petroleum over 2.5%. Occidental Petroleum over 2%. Phillips over 3%. You see the picture here. The outperformer here, there are no outperformer. You could say that Kinder Morgan outperformed just a little bit, closing about 0.87 in the red. Moving on to industrials. And again, which name is working in industrials today? The name that is supported via options gambling. Boeing. It's the only name that you see here, a major name that is closing in the green. The reason is the gamma squeeze in the options market. Boeing closing over 2% for the day. However, we see declines of 2% or so for Northrop Grumman, Lockheed Martin, Raytheon down over 1% apiece. What about Caterpillar? Giving some of the gains from Friday, so did Emerson Electric. Remember that Emerson was up over 6% on Friday. Today it's down a little over 1% or so. Now remember, if the dollar is going to pop, you will see more pain in energy, materials, and industrials. And you will see the trade shifts to technology and the momentum names once again. What's going on with healthcare today? Pfizer, again, it is one of the few names winning the day in healthcare. Why? It is supported by options gambling. Are you starting to see a theme here? The stock market has no volume. It dried up. Nobody's selling. Nobody's buying. Everything is done via options right now. This is the maniac market of 2020. Pfizer closing 2% to the upside, a little over 2%, but we do see declines for Johnson & Johnson, Bristol Myers, Sanofi, Eli Lilly, all closing in the red. What is winning? Again, Moderna, supported by options activities. A lot of call options activities going on for Moderna, closing a little over 4.5% for the day. And we see pharmacies taking a break here. Walgreens down about 2% or so. CVS down a little over 1%. Similar story with diagnostics. Illumina down over 2%. Dexcom down over 3%. Which name is standing still? Thermo Fisher. A viewer asked me a few days ago, should I buy Illumina? I say no. Illumina is just going to pop higher. It's a high beta name right now. If you want a solid investment in diagnostics, you pick Thermo Fisher. Wait for a dip and buy this name. Illumina has a lot of problems to overcome. Moving on to financials. What's going on here? We see a red day overall for regionals. The big banks are muted, slightly in the red. The biggest decliner here is HSBC from Hong Kong, down over 3.7%. What's going on with credit cards? MasterCard down. American Express down. However, Visa flat along with PayPal. Morgan Stanley down a little over 1%. Goldman Sachs closing down about 0.5% or so. What's going on with the rotation trade? Today, as you can see, it is a shift back to the Qs, to momentum names. We see Facebook, Netflix, Shopify, Apple, even Peloton working today. What's not working is DocuSign. DocuSign had massive gains last week. Some profit taking here. You go across the aisle to the comeback stocks and the reopening names. Again, we're not talking about massive declines here, but we see underperformance. Of course, the Cheesecake Factory got whacked down over 5% or so. However, we see Ulta Beauty, the pain continues 2% or so to the downside. But all in all, these declines are very small when you compare it to the gains that some of these names scored last Friday alone. So we'll see if this theme continues this week. Is the IWM and the reopening names are getting a little heated here? I certainly think so, and this is why I placed a bet against the XRT today. What does that mean? Does it mean an overall decline for the stock market? No. Absent of a catalyst, we're not going to get the overall decline scenario. We're going to play the rotation back and forth. So they're going to rotate back to the tech and momentum names. Moving on to the charts analysis. What do we have here? Here's a SPY from a daily perspective. We did not do anything all in all from a 15 minutes perspective. So we're skipping that. We're still in range. We traded pretty much along the lines of the last candle, doing pretty much nothing. Technically, there is room for the SPY to run hotter and higher. However, the volume is drying up. Who's going to support the market? Who's going to push the market higher right now? We need an entrance of new blood to the market. New blood is not here. Retail is either already invested all in or they prefer playing with options. We saw that the passive firms already pumped billions of dollars the last few weeks. You see all this gapping in the chart, which is, by the way, very dangerous. When you do that, you are going to hit an air pocket and you're going to go down to fill most of these gaps. Remember, about 70% of all gaps, specifically in the ETF charts, are filled. You're not going to let these gaps stand alone and just march higher and higher. You're going to have to go down and close some of these gaps. 70% chance that this will happen. Moving on to the Qs. Similar story. Is there more room for the rally in the Qs? Yes, there is. But we're getting a little hot here. Check out how many green candles we had. 9 straight days of gains. No one wants to sell. There is a seller dry out. What's going to happen? Realistically, we're going to have an exogenous factor that will force the selling. Is it a black swan? Is it a fallout in the stimulus? Is it bad news about the vaccines? Who knows? It does not matter. It could be also a factor related to the market, such as a sudden rise in the dollar index. If we do have a fallout in the Brexit talks and we see the pound, the British pound collapsing, the dollar will gain significantly. We know that the dollar has the highest net short positioning in history, meaning if the dollar rallies for whatever reason, we will see a short squeeze in the Dixie of epic proportions like you have never seen before. And speaking of the devil, let's talk about the Dixie. Here it is. Overnight, the dollar index climbed really high, closing above the 3 previous candles. However, as the trading started here in the US, we saw declines and the dollar going back and forth, closing pretty much flat. But we do see that the dollar is oversold from an RSI position, from a MACD position, from a Bollinger Band position. It is very oversold and it's likely to bounce. And again, it all depends whether shorts are going to be squeezed or not. That is the most important factor to watch for here when we look at the dollar index. Moving on to gold. What's going on here? The rally continues, and again, I'm crossing my fingers that gold is going to make it all the way to 1925. That will be my profit-taking level. Again, a high surge in the US dollar could affect gold negatively. However, you have to watch yields as well. If we see the yields are taking a break to the lower side, gold could rally even if the dollar index is climbing higher. What's going on with yields? Here it is. The TNX pretty much flat, closing within the range of the last candle, and it is consolidating, gathering energy to crack the 1% target. What's going to take yields down? A fallout in the stimulus talks. Otherwise, you will see yields climbing higher. But pay attention here. Yields might not like the smaller stimulus. So if we have news that the Democrats and the Republicans agreed on a $900 billion stimulus, and McConnell comes out and says, look, if we win the Senate seats in Georgia, I'm not giving any more stimulus. That would be bad news. And you will see yields collapsing lower, even though we just passed the quote-unquote stimulus. Because the market wants more, and more. Moving on to the VIX. What's going on with the VIX? The VIX traded higher today, melting down throughout the day as the trading activities took place in the US. But you gotta remember this. It still managed to close in the green. That is number one. Number two, it is still hugging my bottom target in the RSI, the level of 35.70. I usually buy the VIX at that level. It's been hugging that level forever right now. And when it does that, it is gathering energy to pop higher. I still believe that the VIX has another pop higher, and I'm willing to put my money where my mouth is and buy VIX calls. What supports the theory is the MACD. The MACD's already crossed the blue line average movement, and it is creating green impressions on the histogram, suggesting that there is another rally for the VIX here. Again, piece up the puzzle yourself. The dollar index looks like it's ready to pop higher. The VIX looks like it's ready to pop higher. The indices look exhausted and they need new blood to continue the march higher. What does that tell you? We are getting very close here for a correction. Oh, and by the way, here is the put to call ratio for equities, and this is the daily by the way, we are down to the same levels we've experienced back in September and June. What happened then? We had corrections, both in June and September. The assumption is that we can have another correction in December. Moving on to Apple. What's going on with Apple? Here is a daily chart. Remember, we've been talking about Apple starting to look a little bullish here, and you see the chart making a series of higher lows, and right now it is consolidating in a bull flag formation, suggesting further upside for Apple here. What supports the theory is the uptick in activities in the options market for Apple. We saw Apple being muted the last 2 weeks. Today, we're seeing more activities for Apple. If that continues to pick up, you'll see Apple climbing higher. What's going on with Tesla? Remember, we talked about the level of 599. Cracking above it will give the way for another leg of the rally, the C leg. We have an ABC pattern. You cannot even see the C leg because the chart is way overextended. This is how crazy the Tesla chart is. You cannot even see the top of the chart. But technically, there is still more room to go for Tesla here. Remember, my target is the 84 level in the RSI. If we reach that level, I am willing to short with both hands. Right now, I'll short with one pinky. And let's move on to conclude this video with the viewers' questions. Question number 1, and I am rephrasing, by the way, because some of the questions are long, and I'm rephrasing it for you to make it simple. The viewer asks whether he or she should short Moderna. Here is a chart of Moderna. And the viewer goes on in the question saying that we have seen a reversal candle, a massive one, suggesting that it is time to short Moderna. They go on and say that the RSI is too extended and the MACD is too extended. That is all true. Moderna is getting exhausted here, but we continue to see the gamma squeeze in the options market. That is number 1. Number 2, the options are really expensive because traders know that Moderna will collapse. At least that is the assumption. And they're making large bets buying put options. That is increasing the premium. Point number 3, what if we have more unexpected news regarding the vaccine? What if we hear that the Pfizer vaccine is bad or it's not working as expected? That would go in favor of Moderna and another short squeeze or gamma squeeze, whatever you want to call it, higher. Therefore, I stay away from shorting Moderna. I'd rather go with shorting the XBI instead, the entire biotech ETF. The options are a lot cheaper, and if you use them via spread, your risk is very, very limited. Even if we see a huge gamma squeeze in biotech names and they climb higher, you only invest a small amount for the trade. If you short Moderna, the risk versus reward could be in your side, but you're gonna commit a large amount of capital for the trade. I don't like that. I like to buy cheap and sell expensive, not the other way around. Here is the second question for Freeport-McMoRan. And pretty much the viewer asks me regarding my portfolio that I liquidated the majority of the names, but I kept the dividend names only. The viewer is asking why did I keep Freeport-McMoRan because it is not a dividend name. The reason why I'm keeping Freeport-McMoRan is the long-term outlook. The long-term outlook suggests a weaker dollar and more economic improvement in China, meaning higher copper prices. Furthermore, this company managed to cut their costs significantly, meaning that their margins are improving. All the tailwinds are in favor of Freeport-McMoRan. But here is the chart. What do I see? The chart is very extended from an RSI perspective, from a MACD perspective. I think it will go down back to the 20 level, which means declines of about 20% or so. Not right away, but over time, specifically if we see a rally in the US dollar. So what am I doing? I'm not selling my Freeport-McMoRan shares. I'm up over 100% in a few months for these. What I'm doing, I'm buying protection. Put options, they're very cheap. I'm buying them. If Freeport-McMoRan declines lower, I get to compensate for my losses in the stock and even eke some profits. So that is my strategy for Freeport-McMoRan. The long-term outlook is supportive. Here is another question. I answered the question yesterday for the viewer, but it was a really good question, and there are only some limits that you can answer with in writing. So I'd rather take another shot at the question and answer it again. And in summary, the question asks, how do you determine which strike price to pick when you're buying or trading options? Is there a formula? Is there any standard that we should follow? No, there is not. But here are some rules that I follow. Number 1, I look at the average movement for the last 2 to 4 weeks. If the stock is having a weekly movement of about 1.5% for the last 4, weeks, I will go with the assumption that the stock will continue to move in the same pace. Meaning, I'm not going to make a bet expecting the name to all of a sudden explode higher, 5%, 6%. If that happens, that is good, but I will keep my expectations tapered to the last few weeks of activities for the certain stock. Number 2, I look at the technicals. For example, here is a chart of Boeing, and Boeing is becoming a very favorable name for options traders due to the reopening, recovery, whatever you want to call it. I look at technical resistance, and what I see here, I see the level of 253 as the next solid resistance. So if I'm playing to the upside and I'm giving myself 4 weeks or so for the trade to work out, I will go slightly above the resistance line, meaning I will pick the 255 strike, or I would do a spread where I buy the 250 strike price and I sell the 255. And I'd rather do it that way so my risk is limited, and again, I'm just expecting a rally all the way to the resistance line. The stock need not to close above 255 by expiration date. Once it rallies all the way to the resistance line, the trade will be profitable and it is time to take your profits off the table. Factor number 3, I go in the options chain for the specific stock and I look for all the in the money, on the money, and slightly out of the money options. And I look for the change in implied volatility. And I will pick the strike price that has the most demand. Think about it as the herd mentality. If others are buying the same strike price, back to the Boeing example, if my time horizon for the trade, say to New Year's Eve, I will look at the options chain and I'll take a look at the call options from 240 all the way to 255, which is my upper maximum limit. And I will study, number 1, the change in implied volatility throughout the last few days. Number 2, the change in open interest for the last few days. And I will pick the option that has more demand because this is the option that is likely to appreciate the most. So sometimes you use the sheep/herd mentality to your advantage. And again, to keep it simple, not everybody's going to do all of this homework when they construct an options trade. So stick to certain rules. And these rules are: define your risk. Don't go crazy buying way out of the money. Limit your entry price as much as possible and give the trade enough time to work. I stick to these rules, and over time, the majority of your trades will be profitable than not. And here is the last question of the day. The trader is asking, can you repair an options trade that is not going your way by turning it into a credit spread? Meaning, back to the Boeing example, let's say that the trader buys the 250 calls expiration date next week, December 18th. Now, what happens if we see a rotation in the market from the reopening names back to tech names and Boeing starts to trade lower and lower, meaning that the likelihood is it's not going to go to 250. The trader is asking, can I do some repair by turning it into a credit spread by selling the 245 or even the 240 to compensate for my losses from buying the 250 call strike? You can do that, but it is a very dangerous and frankly dumb strategy. Here is why. If you're going to turn it into a credit spread, you're going to have to allocate some collateral because there is a gap from your strike price and the strike price that you're selling to receive credit. Furthermore, what if the stock stops the decline and goes impulsively higher once again, reaching your initial target of 250? Now you have amplified your losses, so instead of doing a repair job, you made a mess instead. You dug yourself deeper in the hole. So the best strategy is, prior to even entering the options trade, before you enter the options trade, ask yourself these questions. What if the trade doesn't go my way? What is my plan B? Am I committing a lot of capital for this particular trade where I'm going to lose sleep or not? And let's say that you did your homework and you bought the 250 strike price and now the stock is not going your way. The best strategy is nip it in the bud, cut your losses, and get out. Don't try to make cute tricks to turning it into your favor when, matter of fact, you're digging yourself deeper in the hole. I don't like the strategy of doing the repair job by turning the options trade into a credit spread. Bad idea. Don't do it. With that being said, that is all I got for you today, and we'll talk again tomorrow. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.